Good evening, fellas. It's the week has closed, and I will start off by saying sorry for the bad audio for the past few videos. It seems for some reason my PC has selected my my headset instead. You know, the mic that I have on the headset instead of the mic that I have on stand in front of me, which is way better. So I hope this solves it for you. I know many people were complaining with very low noise and excuse me, very low volume. And then all of a sudden, you know, also no volume at all in the last video. So sorry for that, guys. Terribly, terribly sorry. Yeah, let's see here. I think the futures has closed. I think we will just look into our beloved gold trade, the good old gold. Where we look at gold in relation to other stuff as well, just to see where we are. And if you know me, I mean, gold is just incredible. It's just a stunningly good trade right now. Much, 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 much higher than we are right now. That's for sure. So let's look at it here. The weekly stuff. Again, this is my main, you know, template. So I keep it very simple on that one. But I just want to point out here, this back in 2017, 18, 19, we broke out, we bull flagged. Same thing here. 4 years, breakout, bull flag. It looks, I mean, in my view, you want to buy the pullbacks every single, you know, chance that you can get it. Like if you have a 5% drop, 10% drop, depends on how you play it. Gold should be accumulated big time here. We are going much higher. From this small fractal alone, that inverted head and shoulders right there, we are pointing to just, you know, 2,650. And that's where we're going. In my view, that's also, it correlates heavily. If I can't just get this thing to work, I want to remove that. Heavily with that trend line up here. So I think when we reach that, I could see a deeper pullback there, actually 10% or so, maybe even more when we get to there. But that could also be a lot of other things breaking. So 2,600 plus minus, that's a big, big number. But we will get there in my view. For gold, looks incredible. What is also incredible or teasing us is that made, you know, the gold to silver ratio. You can just see how close we are. Basically, this rail here, 1, 2, 3, 4, 5, 6, 7, 8, 9, 10 times we have been here and we haven't broken yet. Could this be the time? Could this be the time? Again, getting below, as I mentioned in one of the tweets, 81.5 game on for silver and gold, even more than today, especially silver. I think when that happens, I think it will be the break of silver above 30, and then we will go to 50 very quickly, very, very quickly, like half a year, if I were to give a guess, but it will go very quickly. Here we have, oh, this is a beauty without any questions. This is gold divided by inflation. If you just have the slightest understanding of technical analysis, you know that this is heavily, heavily, heavily bullish when we break here. We are pretty close to having gold outperform inflation big time. To see it here, the chart is fantastic, by the way. So we need to get above here, you know, roughly a tad below 8, so 7.7, 7.6 in the ratio, and we are basically good to go. It looks stunningly good here for gold to finally again become, you know, that inflation hedge that it hasn't been for the past 12, 13 years right up here. But we basically break even. But again, this is a major, you know, saucer or a cup and handle, and it's going to outperform heavily the inflation trade or the inflation. And remember, this inflation is not going away. It's going to be elevated. So you would even have gold outperforming that. Fantastic. Gold here against the SPX. This is goes back to 2011 and the low from 2000s. Basically, we're just squeezing up heavily here. And we are just, you can see the wicks here. I want to show you, I want to zoom in. I want to zoom in. Right across there, that's the weekly closes, the monthly closes, and then you have the big one up here, 0.5 in the ratio. When we break, that's just, you know, you have gold outperforming the SPX, which is one of the biggest milestones or, you know, confirmations that gold is in the driving seat, because then you all of a sudden you have gold outperforming the overall broad American stock market. And people, you know, people with a lot that are way more wealthy and better than this than me, they're watching the same thing. So when it does, you know, they will start to allocate more from their SP 500 portfolios into gold. Again, it doesn't have to be much. Maybe they do like 5%, but in a tiny gold market, that's huge. That's insanely huge. So NASDAQ here also very, very potential double bottom here, breakout, grinding there, a bull flag. And if we start to go higher, you also have long period, maybe 10 years worth of gold outperforming the NASDAQ. Tech, same thing applies, as I just said before, on the SPX. So I love gold. It's fantastic. It really is. Here we have the gold divided by the Dixie. And why do I do that? The reason I do that is to see right now we also have, and you might have noticed, let's remove that stuff over there. You might have noticed that gold is doing well, and actually the dollar or the Dixie is doing well. So you have the dollar outperforming the other currencies, but you actually have gold outperforming the dollar. That's incredible. In my book, that's, you know, the definition, or not the definition, but the science of a currency crisis right there. You can see here gold outperforming the Dixie. That's incredible. That's really good. I like everything that I see in this chart here. Yes, there's a lot of other things going on, but I have removed that. This over here is the target. We can do the measured move. Together, you and me, we can do it there. Wow, that's nice. And the break there. So we're going to roughly 30 in this ratio. We are now at 22. So we're talking about a 40% outperformance of gold in relation to the Dixie over the next maybe 1 year, year and a half. That's nice. Maybe even a bit longer, actually. But anyways, you know. Also here we have, let's just remove everything just to show gold in world currency units. That's a basket of units. So again, gold in other currencies are winning. That's beautiful. I mean, gold again, nothing to be bearish about, and that's also why you see the miners doing so well here, breaking out of their 4-year pennants, the wedges that we're seeing there. So it's just incredible. Oh, this is a beauty. This is a masterpiece again. This is better than art in my view. You have gold outperforming the M2 money supply looking back 20 years. And again, that's also one of the nails in the coffin for this gold bull market. We're finally breaking here. We can actually do like a fib extension here if we are to get really nerdy. So the 100% measured move is all the way up here. And we can see that gold is actually setting up to, if we are to reach that, by the way, if we are, gold is setting to outperform the M2 money supply by roughly 170%. And I do think here when things goes downhill, that the printing press will get back online with full force. When it does, the M2 money supply will increase heavily, but you will have gold do more. Beautiful, beautiful. This is gold in the overall median American household. The median price for houses. Again, here we're also setting up for a potential big breakout in gold, meaning it's actually better to hold gold than a house. Big breakout, very close here. You can see very, very close. I do think we need a little bit of a slap in the face, and that's actually what I prefer. And then boom, then we go. Hopefully not that long, but anyways, it doesn't matter. You know, just a 1, 2, 3 touches, and then we get like that little bit of a snapback, and then boom, we go. We've seen that all the time. You have seen that on the gold chart and as well, and the silver chart also. We get that third, and then the little dribble, and then off we go. Also here we have a bit of an iffy chart in my view here in relation to the Bank of America. See here we're trying with this. I wouldn't call that a bull flag, but like a major channel here. If we can start to break this internal stuff here, we can potentially go to the upper side. But again, it's a bit iffy for my taste here. When we get some momentum there, then I think it's on. But overall, it's very difficult to look at here. Oh, nice. I haven't been looking at this for a long time. We need to go to the 3-monthly time frame. This is massively long term. You have gold also outperforming the US debt. Just think about that for a second. Gold is a better option than it's outperforming the US debt, you know, how much they add to debt each year. And they add a lot, right? So on a percentage basis, gold is better. Or do you want really? I mean, it's really good. We can also take a quick look into the ETFs. This would be on a long-term basis. In long term, this is GDX here. I just did the daily scoreboard on YouTube, so don't mind me. Just remove the stuff there. Just to keep it simple here, we have a 10-year, 15-year long wedge pattern, in my view, about to blow heavily to the upside in miners. They will be printing money like there's no tomorrow at these prices and higher prices, which we are going to get. SILJ here. You can see here again a bit of a messy chart on the 3-monthly, but anyways, we have broken that downtrend there. We get to some resistance here, but I do think we are getting to tag here again at roughly 50, pull back, and then we are going to go higher. Together with the metals, it's setting up for the perfect storm. And yeah, I'm just happy to be involved. Finally, we get some lot for the miners, and it's just getting started. The past 3 years has been really, really, really rough. So yeah, guys, stay safe.